Good morning, guys. Good morning, Apollo. Welcome to today's session of Market Snapshot. Is actually trying to see that news that has just come out on Euro USD. I hope you're all on the charts. It's an interesting morning and an interesting day in general. Let's see. German I4 should be out. So let's just look at what. I think this is the first time the news is coming out live. Let's see. Yeah, so as expected, we coming in worse off. Yeah, and this is it makes things easier for us to trade today, and we will talk about that in a few minutes. Yeah, so if you can hear me in the comment section, just say hi and good morning, John, Sylvia, Apollo. Please share the link to the new bullish banter release this week. I have not managed to get one. I will follow up with that. I'm sure Rufus and the team, either it should have been released or I'll just follow up with that and then probably see it during the day. Yeah, so very interesting day. I know that the euro should be dropping and there are obvious reasons for that. Let's see what the reaction has been. The 1 minute. Yeah. So this one was a very obvious play, but let's just discuss what is happening with the euro and the symposium today. So let's hop over to the article for the day. Okay, so this is the main event for the day. We have two central bankers from major economies speaking. We have Powell and Lagarde, and it's not looking great for Europe. Not to be an alarmist, but from the look of things, it's very obvious Lagarde is going to have a very hard time controlling the inflation and the economy in general. So let's just go through the article and dissect it. Okay, so we've had the symposium the entire week. So I think it's from Wednesday, or is it from Tuesday? And the bulk of this Fed speak has been rather quiet for the past couple of months. And now yesterday's remarks, dovish. So one guy was dovish. One of the members was a bit dovish, but I don't think it really helps the situation because most of the guys are either refraining from saying that rates should stop or just maintain the hikes maintain the rates without increasing them. And we have this is one of my favorite members here, Bullard, who is always just hawkish. So that was expected from him. That means we are likely going to see most of the members still in favor of higher interest rates for longer. Yeah. So today we have the chairman of the Fed speaking. So yeah, they're saying, so what's on the agenda for Powell today? Arguably, the backdrop has not changed since the FOMC rate announcement a month ago. So we don't expect a big difference from what he said a month ago. And remember, the previous month, the dollar came in really strong. Actually, FOMC minutes show that caused the dollar to be really strong. And we kind of expect the same sentiments today. The disinflation process has progressed in line with expectation, while key activity and indicators prove to be resilient. Yeah. So Powell will have to once again deal with his own committee's projection that sees rates being raised one last time. So there's that possibility that guys are saying that we need to raise interests just one more time before we maintain them for that. But at the end of the day, US, either interest rates are going to go high or they're going to be elevated for longer periods of time. And if you look at the treasury yields, the US treasury yields, it's still as high as it was. It's still at one of the highest levels. It's at 5.02. That's for the 2-year treasuries. If I look at the one, can I find the 1 year here? Let's see if we can find the 1 year. Yeah, even the 1 year is pretty high. It's at 5.431. Yeah, that means the market is still expecting another rate hike. And It means the dollar is still going to be strong for some time. Conversation subsequently help us understand how the pullback. Sure, SMC. Also, we had a session on SMC, two past videos, one on Monday, one on Wednesday. I think you can check them out. One was talking about market structure. The second one was about supply and demand. We can go through those questions in a different session, or I'll touch on them slightly. But for now, let's just focus on what's happening in the markets, because today is one of those days where it's a bit obvious what to do. So he will probably reiterate that the Fed is open to the possibility of one more hike, and markets will be hardly surprised. So there is that thinking also that we already expect it, so there isn't going to be much of a reaction or much of a surprise, because you already expect another hike, or at least resilience or higher rates in the market. The recent rise in US rates is surely complementing the monetary policy, including the tightening of financial conditions. Now, the recent firmness in the dollar probably factors in some market expectations for a hawkish tone by Powell. So we don't expect another USD rally today. Okay, so here the thinking is it's already priced in, but that explains why the dollar has been strong. So if you look at the markets, let's just have a look at the markets before you go to Euro, because Euro is going to be a very interesting play today. Let's just go back to these markets here on the charts, and then we come back. Okay, so let's look at gold first. So this is gold. On the daily, we have this sort of a channel here that we've been going down. And remember, on the daily, these dotted lines are period separators for the month. So this is where the month started. And you've seen that for the entire month, we've not had any healthy pullback. We've just been going lower and lower. Now for the past 4 days, the pullback finally came. You know, the question is this really the start of an uptrend, or is this the start of an uptrend, or we are still in a downtrend? And chances are we're still in a downtrend, and this is just a pullback, and the market might continue dropping lower. Now, where are the plays, or where are the key areas to look for in gold? Number one, because you have this channel, it's easier to spot obvious levels that you can look for the market to reverse. The first one is at the top of this channel, we have this OB here. So in the event we come back within this region, that can be a good area to look for selling opportunities or plays for reversal. However, if we don't go to that point, then we might just end up feeling this imbalance and breaking lower. So let me just do that. A minute. Okay. Yeah, so we still have the likelihood of breaking this low even today if everything doesn't change. Yeah. So where should we be aiming if gold decides to go lower? There is this gap over here. I hope you can see this. There's this gap over here that we are trying to see if the market is going to come back to this section over here. So in the event we have gold rallying lower, the first target will be this gap over here, but then we have this entire imbalance over here that probably will just run to it to the bottom of this section, which coincides. So I extrapolate this. If you go to the bottom of this channel, this coincides with this support over there. Yeah. So of course, this is not going to happen in a day, and a lot of things can change by the time we are doing this video in future. So the most obvious direction, or the most obvious target for now, will be this gap here, down here. How we get here, we might have a pullback. This pullback might continue fast before we go lower, or we might just feel this imbalance for the day and just aim for these lows over here. So that's the play with gold, and that's how we see it unfolding. So in the rare chance that we go past this order block and past this channel, then you'll have to look for fundamental drivers to have a clearer understanding of what's happening. So in the rare chance that we do that, which I doubt, but there is still that possibility, then we need to have a fundamental backing as to why gold is going up. But from the look of things, yields are very high, US yields are very high. So usually when you're looking at comparing the gold to other safe haven assets, the most obvious choice is US treasuries, US yields. And if US yields are offering if US yields continue offering more, then it becomes a more attractive safe haven investment than gold. And that's why, since US yields have been rising, it's likely going to continue impacting gold negatively, and we might see us going lower like that. So those are our targets. Unless we cross this point, that's when we'll start looking for any reasons why gold is going up. But at the moment, everything points towards lower prices for gold. And as per how you play that, it's up to you, but these are the targets or the levels that we'll be looking at going forward. So before we move to Europe, let's just look at the other assets in the US. And the other one is NASDAQ. Okay, so with stocks, obviously we had NVIDIA announcing their earnings earlier in the middle part of this week, and that caused this huge spike up in stocks. Remember, this year the entire craze is on ChatGPT and AI, and for AI to work, it needs graphics cards. And the one company that knows how to make graphics cards well is NVIDIA. So NVIDIA has gained a lot this year, and it's literally also impacting other companies that use NVIDIA, like Microsoft, like the other companies that are into AI, all rely on NVIDIA. And that's where the earnings really costs that push upwards. And then just like clockwork, we just came back down to this level. However, one interesting thing about stocks is for the entire year, we have been seeing high interest rates will cause stocks to drop almost the entire year, but that hasn't been the case. And I think it's because of the resilience in the US economy and the fact that as long as you keep on having steady profit margins and companies in the US performing well, this is going to remain an upwards trajectory. So at the moment, we are at a very key level in stocks, especially in NASDAQ. At this point here, if we break lower, then we might start maybe the entire craze of the market dropping because of high rates. That's when you might start thinking about it. But at the moment, stocks have defied a lot of those expectations and predictions about it going lower. And chances are this was just a pullback, and we might see us trending higher. So despite the fact that we have high interest rates, as long as companies are steady and as long as there's that driver of growth in these individual tech stocks, then we should continue seeing this go higher, despite the fact that the Fed is raising rates. Remember, most of the times in a bull market, when everyone starts to think markets are going up, probably that's when they might reverse. But as of the moment, everyone still thinks the market is going to drop, and that's why I don't think one of the reasons that is that we still have this upward trend, despite the fact that there are so many predictions about the market crashing because of high interest rates. So yeah, so that's with this. And if you look now at the H4 and the 4-hourly, we've come back to this order block here, and there are good chances that we might feel these imbalances as we go higher. So that's with stocks. Okay, now let's go to Europe and see what's happening there. While I go through the chat section. Chinese data affects AUD, and the D oil definitely. I wonder if any effects JPY. That trading has become extreme short. Yeah, so we'll talk about the BOJ. So we have yeah, here we have Japan. So we'll talk about what to expect in Japan in a few minutes. Let's first talk about Europe, which is the most obvious and interesting play, especially if you're trend trading. This is probably going to be the most obvious play for next week. So just a minute. Okay, so now in Europe, it's a bit more complicated than in the US. Let's start with this article and then we go to Forex Factory and see the data that came in this week for the euro. So Lagarde probably faces a harder task than a US counterpart today. The latest PMIs confirm that the Eurozone economy is heading towards a period of sluggish growth, which now makes a hawkish statement harder to sell. Now let's dissect that statement. Yeah. So if you look at the data this week, including the German I4, this one, let's get this in, including this German I4. If you look at first of PMI, if you're looking at this in the morning, you can see that normally we wouldn't look at such data because but now for the Eurozone, it's very consistent. It's very hard to ignore at this point. So if you look at the flash services PMI, it's at the lowest we've ever been the entire year, actually more than a year. And that tells you one thing, that the economy in the Eurozone is not looking quite okay, because seems to be as both manufacturing and also services are looking sluggish, and that is taking a toll on the Europe economy. And we had a slight improvement, obviously, in manufacturing, but most of these indicators are pointing towards weakness. So you see even the German flash services PMI. Remember, Germany is the biggest economy in the Eurozone now. It's very low. So it's been the lowest at 46 for this entire year. Remember, January is here. So things in Europe are not looking very okay. And remember, let's look at now this one. German I4, which has just come in a few minutes ago. Yeah. So you see both the manufacturing sector and the services sectors in Europe seem to be struggling quite a lot. And that is having a toll on the euro. Because now, remember, for a central bank to raise interest rates, it must not take a toll on the economy. But for for Europe, we still have persistent inflation and the economy is looking very sluggish. You know, in the US, we have inflation was high, but then the economy was looking great. So they had room to raise interest rates. But for the Eurozone, it's becoming harder to sell that statement. So it's becoming a harder sell. Lagarde is going to have a tougher job convincing guys that they're really going to raise interest rates. And the market, you see here, our perception is that Lagarde is unhappy with the market's recent scale down of rate expectations. So they're thinking there's only a 40% chance for interest rates to be raised in the Eurozone. And that's taking a toll on Euro USD. So if you look at the charts, now let's go to the charts. So if you look at Euro USD, especially on the daily, that's what we're going to start with. You see that we've been in this upwards channel, but it's very obvious that we're heading to the bottom of this channel. Yeah, let me zoom this out. It's very obvious where we're heading to, and chances are we might break this channel and go lower. Yeah, so we have this demand zone over here that can be a very good potential target for Euro USD, but it's very obvious that things are not looking great in the Eurozone, and it's providing sellers with an opportunity to continue selling the euro. And if you go back to this article here, Yeah, they're saying the Euro USD 2-year swap rate differential has widened in favor of the dollar to the 140, 145 basis points level. Yeah, so the yield on the just a minute. Okay, so the yield on the dollar is looking more attractive in terms of how much it's offering than the euro, and that is again making the dollar continue gaining strength against the euro. So that's why here we should expect probably us to completely get to this bottom of this channel pattern here, but more importantly, this demand zone here can be a very good target when selling. So if you have, for example, H4 like that, any upwards move in euro, either into this level or into this level, provides a very good opportunity for sellers to come back into the market and attempt to get to this point. That's why we've had the euro dropping for the better part of this week and last week, because it's becoming a bit obvious that the ECB will have a hard time controlling both inflation while the economy seems to be stagnating per se. So that's with the euro. So your plays here should be looking for reversal patterns. Of course, use your own technical analysis techniques, but reversal patterns will be very useful in this type of market, especially in the event that we have a strong pullback in the euro. But if we don't have a strong pullback in the euro, then chances are we will continue down to this area over here. Okay, so that's with that. The same can be said for GU, although not to that extreme extent. But it seems for the better part of today, and mainly today, it's the euro that's going to have a lot of action. On Monday, we have, I think, a holiday for UK, so I don't think we expect a lot of activity. I don't think we expect a lot of activity from the pound, although the speaker is going to speak on Monday. So we'll have to keep that in mind. So yeah, so main play for the day, Euro USD, watch how it moves and watch how it behaves. You might find some good opportunities there. Yeah. Next, pound, we've talked about it. We don't expect a lot today, but in the event Euro continues to weaken, then Euro GBP is also another good play that you can look for instead of Euro USD in terms of selling. Okay. Lastly, Tokyo and Japan. So Japan is a very interesting case because the strength in the dollar doesn't necessarily mean an upwards trend, and we've been saying this for weeks. So in as much as there is some resilience in Tokyo, sorry, in Japan, and today the main event is dollar strength. I wouldn't bank my money on USDJPY rising too much. We think, so yeah, they're saying we think that the hawkish tone by Powell largely is priced in today, but should be enough to keep USDJPY around 146. So let's just look at the chart for USDJPY. Remember, again, BOJ intervention should be at the back of your mind. So in as much as this is looking, so we had this nice pullback down, which offered some selling opportunities earlier in the week here. Shouldn't expect this to go really high, because remember what they did last time when they woke up and decided Japanese yen is too weak, and they started to intervene in the market, and we had this drop. So the higher we go with USDJPY, the greater the likelihood of the Bank of Japan intervening in this market. So I'll be very careful when looking for buy opportunities in USDJPY. Okay, so let's go to the chat section and see what else we should be looking at with regards to the markets. Okay, I think we've talked about BOJ. What else is here? Stocks high as a result of loose economic resilience. Fiscal policy, probably, but the main, so monetary policy, clearly stocks have ignored the fact that we have tighter financial conditions, apart from banking stocks, that is. But it seems to be the case that stocks, especially tech stocks, are seeming to be very resilient. Remember, there was at some point back, there were a lot of layoffs in the tech sector. So right now, when you come to what is perceived as a bearish market, where the Fed isn't pumping cash or tighter policies, investors tend to look for stocks that are, or companies that are performing well individually. And you see these companies make up a majority of the NASDAQ and the US 500. So at the end of the day, the NASDAQ and the US 500 end up rising either way. Yeah. So as long as these companies are showing that they are profitable, stocks should continue, or then indices should continue going high, unless there is something very extreme. And I know that's a very contrarian view, because you expect that because monetary conditions are very tight, this should be going lower. Yeah. And if that was the case, we should have seen NASDAQ drop a long time ago, but it's still holding its ground. And that says something about the resilience of these companies that make up the index, especially the major companies, the Microsofts and the Amazons and all those ones. As long as they're doing okay, I don't think we should have a reason to be worried about a drop in the economy. Sorry, in the stocks. So that's that. Oh yeah, there's oil. Not talked about oil. Let's see. Let's see if we can touch on oil a bit. Okay, so I've not had a chance to go through this article, so we'll go through it together. So let's see. So oil prices closed volatile. Prices began recovering midweek. What's the data showing? Gas oil stocks held dependent storage. Now refining. So they're saying here, falling refined product stocks in Europe and a drop in the US 2-year treasury yields likely lifted oil prices, as per this UBS analyst, adding that volatility is likely to persist until investors get clarity on the next move. I think US yields the 2-year yields are still high. So I don't know what he's saying. But if you come here and just search for US 2-year, so that's US 0.2. So the US 2 years are still one of the highest levels. So if we go to the oil, unless it starts dropping now, maybe you've seen that it's going to drop. But if we go to the chart for oil, we seem to be at let's see. So this is US oil. Yeah. So remember last time I had drawn these arrows, expecting resistance, and indeed we had this push downwards. So I think for the better part with oil, we might not see any strong moves in either direction unless there's something to substantiate strong moves. Considering also, yes, we are in an uptrend. Let's just look at this from a purely technical perspective. We've had this push upwards here, and then we've had an attempt to break these lows, but it seems as though the prices moved to fill this gap over here. So there's this gap here that has been filled. So chances are we might have, from a purely technical perspective, this seemed to be like a run in liquidity. Then now we might see a slight push higher, although I don't expect it to be sustained, because oil demand, unless China seems to be, let's look at China. Unless China, I think demand in China goes up, then I don't think cutting supplies will do anything for oil as much. But I'll have to obviously research later. So we see oil being muted. Yeah, actually that's what they're saying here. Let's go back to this screen. Yeah, so oil prices muted amid doubts over China demand, because China is the biggest consumer of oil, obviously. So let's continue assessing demand instead of supply for oil for us to have a clear direction in the market, because controlling market prices by cutting or adjusting supply of oil can only do as much with oil. So let's just wait and see. But I think for the day, we have other interesting plays you can look at. If you're entirely just trading oil, you can look at these other assets for the day. Okay. Yeah, so there's a question here. Does that mean USDJPY is strong? So if we, I think this is the last one we look at, and then we call it a day. If we go to the chart for USDJPY, this is USDJPY on the daily. So just have a look at USDJPY, how it's behaving here, vis-a-vis how GBP USD has behaved for the past 2 days, and Euro USD has behaved also on the daily chart. You can see that whereas for GU and EU, we've been having drops, for USDJPY, it's supposed to have had an uptrend. The uptrend is supposed to continue, but we've just had the market consolidating here, meaning that it means that USD is also, sorry, Japanese yen is also holding its ground, and it might be very, if we have any upside, it might be limited. If we have any upside, it might be limited. However, in the rare chance that dollar starts to weaken, then this is your best play to sell. In the rare chance that dollar weakens, instead of coming back to buy Euro USD or GBP USD, the best play will be this USDJPY, because it's showing, Japanese yen is showing some relative strength. Okay, so I think that's it. High rate takes the shine of the stocks. Lately, US data has been coming weaker than expected. So let's look at it. Have a look at that. So for the Fed to do anything meaningful, there needs to be a trend rather than individual data points. For example, for inflation, as much as inflation has come in lower, what's the trend in inflation? So what's the past 2-3 readings in inflation? So you look at the data as a whole rather than just one point. And then the other thing is, how far they're willing to go before things become really bad for the US economy. So if I have a chance to raise interest rates now, when the economy is still looking like it's okay, rather than me waiting when things start deteriorating, then chances I'm going to raise interest rates now before the economy looks bad. So there's that high likelihood of us seeing stronger dollar and elevated interest rates for longer before we start seeing some cool off in the economy. And that means, yes, chances are, yes, the US economy can start weakening, but before that happens, then it might be prudent for the Fed to do everything it can now before it actually shows signs of weakening. Yeah, so I think that's that with unless there are any other questions in the chat section. If not, thanks again for attending this stream. We've had these zones that I'm drawing here we had a session on Wednesday called was it Advanced Market Structure and Supply and Demand? So you can go look at those. I think they will help you charting patterns for here. So having said that, enjoy the rest of your of the day, and also be really careful when you're trading EURUSD. Obviously, use your own. Oh, sorry, I'm sharing the wrong chart again. So be very careful with EURUSD. Use your own analysis, of course, but we've established this is the most interesting play for the day. And having said that, see you again next Friday, and enjoy the rest of your trading day.